Good morning, Market Chameleons and everyone using us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. We're on a different platform this morning, trying StreamYard for the first time. So before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Demetri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, always reach out to a licensed professional. This show, is all our shows and webinars, for informational purposes only, concerning Market Chameleon tools and products. Take one last look at that disclaimer. And good morning, Demetri Park.
Good morning, Will. How are you?
Great. How you doing?
Good. Good morning, everyone. Let me try sharing my screen here.
So today we're going to look at finding large option spread trades, right?
Yep. One second. Well, we're using a different software today, so I'm just making sure I'm clicking on the right thing. So do you see my screen?
Yeah, I've got to add you to the stage. Enter stage right. There's the screen, buddy.
Okay. Good morning, everyone. So I think today what we'll cover is finding large option spreads trades, and I'm going to come over here on our main menu under options. You see options volume.
Yep.
And we're going to start from here and then drill down to finding some large spreads that are trading in particular stocks. And I'll show you a little bit. This here is a report by symbol. Right now it's sorted by the highest option volume based on dollar value of the option trade, so the notional value. And if we scroll down here, we get this summary of all the volume that traded yesterday. We're not open today, so this is as of yesterday's close. And you could see here that 47% of all the option volume yesterday involved multi-leg trade, meaning that it wasn't just a buy or sell of a call or put. It involved another option leg or multiple option legs. So that's a significant part of the option volume, and we want to go and look at what people are doing. How are they using option spreads? Now let's scroll back up to the top, and here on this report we kind of get a summary or an idea of the breakdown of the option volume by stock symbol from a high level. And if we go from left to right, you could see here up top is Tesla. You have the stock price, you have the trade amount of trades, the dollar value of all the trades here versus the 90-day average. So here we could see yesterday the dollar value of the trades was 1.8 times its average daily volume. This is the breakdown by the call and put. And here we have the percent of the volume in Tesla that involved single leg option trades, so either a call or a put. And then we have multi-leg trades. So that was 23% of all the option volume in Tesla involved a multi-leg trade.
Hey, D.
Spread. Yes.
Sorry to bother you. Rob is asking, could you go through the clicks to get to this screen again? Unfortunately, the way it's set up, going over to YouTube, the screen didn't show up right away when we were on a split screen, and so I had to change a feature to get the screen up. So now they can see it, but they didn't see the links to get there. The clicks.
Yeah. So on the main menu, up top under options, if you come down to options volume, this third item, if you click on it, you'll come up to this screen. And perfect. Yeah, so this is a screen just to help find, because it lists all the stocks that trade options. and it could be just a starting point to narrow down the stocks that you're looking at. You can also screen by your watch list. So if you have a watch list, you could drop this down, pick the name, and then it'll screen out the symbols in your watch list. So if we come back to this multi-leg column here, it shows us that 23% of all the options volume in Tesla yesterday involved spreads. And from here, if we click on it, this will take us to another page where we could analyze those spreads or view the spreads. And when we look at the spreads, when they're reported on the trade tape, the trade tape doesn't tell you if it was a call spread or put spread or butterfly. You have to kind of assemble it and put it together yourself and make that interpretation. The trade tape itself just gives you, a line item that this option was part of a spread, and just by taking the surrounding data, you'd have to make that interpretation. But this software helps do that for us. Okay, so make that interpretation. So I'm going to click on this on the 23%, and it'll take me to a new page. And now you could see we're on Tesla. Can you see that, Will?
Yep.
It took us to a new page. And
actually, I don't see it.
All right, let me see if let me see if
I'm still on the other screen.
Okay. Let me see if huh?
All right, let's see if you can switch it over.
Yeah. So let me stop the screen. Present. Good. All right, it's just getting used to the new technology.
Yep, now I'm seeing it.
You're seeing it. Okay, so now we're on this Tesla screen, and we're on the multi-leg trades.
Now, how did you made what Rob's going to ask how you got there.
So I clicked on that hyperlink, the 23% on the.
All right, got you. All right.
So now here we see the multi-leg trades. They are also sorted by the highest amount of contracts over here. Okay, and you could tab through it. You see there are a lot of them, over 1,000 pages worth of them. But you could sort these or even use filters to narrow down the different spreads that we detected. And from here, we could start just kind of getting an idea how were people using it, the option spreads. And some of it, you probably need some experience to kind of understand what may have been going on with these spreads, because you have your call spreads or put spreads that everybody understands. But I'm just looking at it right now and seeing just from experience that I do know what this put interest rate play is. And this is typical of more professional trades, market makers, maybe specialists that take advantage of options that are early exercise. Okay, so put that becomes an early exercise candidate because it's deep in the money. And then another trader does not exercise it because I don't know why, but it's not efficient. So they do these put interest rate plays. It's a little bit complicated, so I'm not going to get too much into it, but that's what this over here is. The next one here, we see that there is a diagonal double call spread. And this, if you observe these spreads and watch them from day to day, you start to see these appear very frequently. And then you kind of understand maybe what's going on. So we could see here that there is a March 7th, 310, 332 call spread, and a March 14th, 280, 307.5 call spread. So we have two call spreads here on two different expirations with different strikes. So what could be going on here? It could be potentially just that whole thing is a spread, but typically just by looking at the call spread in the near term, so this expires today. This was done yesterday, expires today. And it goes out to further out a month, which appears to be a strategy of rolling spreads. Okay, so rolling from one call spread to the next as you come closer to that expiration, and you roll the strikes because the stock is now at different levels than you probably originally did it. So this appears to be a strategy that consists of rolling spreads. Okay, instead of sometimes people have heard of rolling an option. So you continuously just roll an option as you get closer to the expiration to a further month. This appears to be rolling a call spread. So let's just take a look to see if we have additional evidence to suggest that. We could click on this open. So you could see here, this is when it traded, and it traded one time yesterday. And if we click this open, we get further details regarding this spread. And over here, we could see that this is the current market, trade price, trade volume. And if we click on this little plus sign, we'll get more information. So now I clicked on it, and now we get information about each leg. Okay, so we see the March 7th, 310 leg, March 7th, 332.5 leg, now the March 14th, 280 call, March 14th, 307.5 call. Right. And March 14th, 280 call. Well, I could hear the background. Yeah, so the one thing to just help try to validate the theory that I just put forth is this a roll, right? So keep in mind this traded yesterday, and now we want to see, well, how did the open interest change today? Okay, so yesterday traded, the open interest, updates overnight. This was a pretty big trade, so can we get a clue about how the open interest changed? And what we want to see, because it's so big, did the open interest decrease in the legs of the front month, and increase in the legs in the outer month, which here it shows some evidence that it did. You could see here March 7th, 310 and 332 call, the open interest decreased. Now, not by the full amount, but that's also can be due to other trades happening in that March 7th. But it did decline, right? So it did decline here. And what happened in the open interest on the March 14th leg? So you could see here that on each leg, it was up over 11,900 on the March 280 call, and 11,800 on the 307.5 call, which supports that theory. It supports the theory that we're seeing a spread that appears to be a roll from one expiration to a further out expiration with different strikes. So that's what looks like it's happening here. And now we kind of get an idea of like how people or even large traders are using the options in Tesla. Do we observe this from repeating over time? So I'm going to close this, and you can see here there's another one over here, diagonal spread at 1132. March 7th, 307.5, 332, and the March 14th expiration, 285, 312. So if we open that up, we could just observe really quickly to see if it's the same situation. I'm going to open that up. And here, again, we do see that the open interest increased in that further out month, for March 14th, decreased in the March 7th. So we don't see a big decrease in the March 7th, but that could also be due to a lot of other trading activity going on in the March 7th expiration that could also, involve increase in open interest from other trades, okay, to offset that. However, this is one way to try to validate your theories about what you think transpired in this particular trade. So I'm going to close that, and I'm going to just go to the next page. So this page 2, and now we could see, a call spread here that traded 20,858 contracts. Over here, this call spread involved the April 17th expiration, the 265, 350 call spread. And we see here that this has 42 days left to expiration. The difference in the strikes, the 265 and 350, is 85. So this is an $85 call spread. Okay. And if we slide over here, we could see that it traded at $23.30 with the market at the time $23 bid and $23.30 ask, and the stock at the time was $269.65. So we could open that up, okay, because this is already the next day, and see what happened with the open interest on this particular spread. All right, and these two legs. So I'm going to click open, and now we get the details of it. So you can see here that spread, the last bid in offer is $20.35, $20.65. So it's lower, right, than where it traded. Right, it traded at $23.30. Now it's around, let's say, $28.50. And if we open up these legs, now we could see something different here. So what we see here is that the open interest on the 265 call, right, went from 643 to 20,324. It's up 19,000. Which is way higher than this volume. And then we see that the 350 call, the volume decreased by 3,500. Now there's lots of other trading going on here, and we'd have to look a little bit further into it to see what else happened on those strikes. But just observing this, it does potentially look like this was a roll too, rolling down from the higher strike to a lower strike. Okay, because we don't see an increase in both options. So that's potentially another role as the stock went down, rolling out of a higher strike to a lower strike. Okay, that's so far what the data is suggesting. If you wanted to go look at the individual legs down here, if you click on here, this is the actual spread. So each leg over here, you could see that here's the April 17th 350 call, traded $3.55, 10,400 contracts, and this was on the SIBO, right? It was a multi-leg trade on the SIBO, and it was a floor trade. And floor trade means that it was executed with human touch. A broker handled that order. Okay, so it wasn't executed electronically through the order book. There's actually a broker executed it on the floor of the CBOE exchange. All right, and these are the legs. You know, this is the second leg, April 17th, 265 call, traded at $26.85. And you could see that was also on the SIBO. All right. So now we just kind of getting an idea of how the order flow, right? What happened in some of the order flow in the options markets yesterday in Tesla, observing the option spreads, and gives us more insights. This what's going on, right? Which here it looks, just looking at the couple spreads that we analyzed, some of it looks that these traders were rolling existing positions, right? So they appear to have existing positions that they're rolling over, either strikes or expirations. So I'm gonna stop there because we went over a lot today, and I think that we'll just continue on this conversation in the next couple of days.
Yeah, it's great, D. So everyone, thanks for putting up with the new features as we're going through our migration over from Zoom to the StreamYard. Hope everyone enjoyed it. People who are coming from other platforms, I know we tried to get out on X and Facebook today, but the YouTube crew is always going to be the YouTube crew. So everyone who joined today, thanks for joining us. And Rob, I wish that was my house. That is not my house. I am still in the barn. That was just a StreamYard feature. I thought I'd go with it today. So everything's good. Great job, D, as always. Everyone have a great weekend. We do have a webinar next week on Tuesday, correct, D?
Yep. Next Tuesday, we're going to have a webinar with Interactive Brokers at 2 p.m. and that will discuss open interest. So that webinar will be only, focused on open interest, and we're going to go over some of the screeners and insights using some of the tools that we have.
Yeah, let me see if I can get the webinars real quick. And that is at 2 p.m. And you've got to go to the Interactive Brokers website, right, to get that. And it's the title is Analyzing Open Interest, correct?
Yeah.
All right, perfect. I got it. I will share that right now on the StreamYard, and that will go out to all the platforms that we're streaming on today, so everyone can get that link, because you do have to register with IBKR to have access to that webinar. We do not control that access. All right. Great job. As always, everyone, thanks for joining us on this adventure. Everyone have a great trading day and a great weekend. Thanks, D.
Thanks, everyone. Stay safe out there. We hope to see you guys Monday.
Trade in peace, communities. Bye.